Oh, good. Not a whole lot. 5 o'clock Eastern came up quick. Can't believe it's time for another trade of the week. Got Andy riding shotgun. Hello, Andy.
Hey, Steve. Hey, Scotty. Hey, everybody.
All right. So thanks for showing up midweek. Let's just get right into it. This is the theme, trade of the week. We will touch on the actual trade of the week and maybe even some others, as well as some additional stuff. But let me just go through the slides here as usual. Hang on one second. Sorry. Somebody's, my daughter's in
Naturally.
Spain, and she's
Uh,
trying to FaceTime me from Spain. She picked a great time. Me let her know that's not a good time. Okay. Naturally, the disclaimer is letting you guys know that we are a content provider. We are not registered investment advisors. So everything you see and hear here today should not be construed as investment advice. We are content providers, software as a service. We're going to show you some stuff having to do with our technology and maybe a couple of opinions of the markets. But please do not misconstrue any of this as a financial advice. If you need financial advice for investments, you got to go to one of those brokers who took the test, or the RIA guys, anybody who knows the word fiduciary with a capital F and how to make sure that works. Those are the guys you want to talk to. So for now, let's get that out of the way. The first slide, as usual, is the trading. You're not alone with trade ideas. As Scott mentioned earlier, we're going to have a promo code at the end of this session to save people 15% off their first month. And when you consider the amount of attention you will get as a new trader in your first month, let me just go over that for you here. First and foremost, the trading room. Barry, who's been on vacation, but the room has been open. He'll be back in this chair as a moderator on Thursday. It's a great free room. You don't have to be a Trade Ideas subscriber to join that room. It's come one, come all, and Barry is trading his own account using Trade Ideas technology, and there's a great chat window in there as well with some good smart traders as well. And then we've got the webinar series, Monday, Tuesday, Wednesday, and Thursday at 5 p.m. Eastern. Although I understand tomorrow the QA demo is canceled due to unforeseen circumstances. Dan and Brad will be on a job out of the office. But yesterday was myself and Jamie at 5 p.m. Eastern talking about office hours. Today, right now, is the trade of the week with yours truly, Steve Gomez and Andy Lindelof. By the way, Andy and I have been trading together since 1998 when we first met Dan. So the Andy and Steve relationship goes back a long, long way. YouTube, we even had our own desktop sharing service at one point, and then went full-on swing trading with a mirrored account at Ditto Trade, and we outperformed the market for 3.5 years with subscribers joining their accounts to our account called a mirrored account. But don't want to get too off track here. Again, with Trade Ideas, you've got a great onboarding. Addition to tomorrow's webinar, we've got the Friday support sessions. I just went ahead and added this. This was something that we felt was really needed for newer users that couldn't get the ability to get good one-on-one help in a timely fashion. So we have a Friday 3-hour time slot, 11 a.m., 2 p.m. Eastern. Come one, come all, ask questions. We'll share our desktop just like we're doing right now, and you can ask questions inside the question box just like you're doing now. So it's kind of a group training session, which leads me to the very last thing and the most important thing. It's a $99 value, but when you sign up for Trade Ideas, you get one free training session for 1 hour. And that 1 hour, like I said, actually is a $99 value if you want to come back and do a second or a third hour. So for that first hour, you're getting a free one-on-one session for the hour. You're getting the live room, all the webinars. Makes me just say, why wouldn't you give it a shot? If Scott's going to give you guys a 15% discount coupon to try Trade Ideas for, in the high $70, $79 or something like that, considering all you're going to get in the first 30 days, you'll realize if this program is for you or if it's not for you. So, listen up for that code at the end of the session, because, I feel the one-on-one training that you get is worth that in itself. in addition to being able to use the product for a year, excuse me, a month. Subscriber growth obviously is continuing to move higher, and this is based on everything I was just talking about here with our attentiveness to try and make sure everybody understands how to use the program that they've got. New users, new traders, newbie traders, put your fingers in your ears and scream la la la, because this is not for you. This is for automated trading, and my opinion is this is for advanced traders only. Once you've got some scans and some knowledge and some ideas of how you want to maybe unleash some of your trading strategies, we have an automated trading bot that's called Brokerage Plus. Right now it's only working with interactive brokers, and it's currently in beta. It will be coming out of beta here in a few weeks, and we'll move on to another trading platform. But again, this is adults swim only. If you're a newbie trader, it's really not realistic for you to come in and try and learn everything at once, including turning over the risk and the reward management to a bot. That's better left for advanced users. All right, agenda for today, what we're going to talk about, we've got a little bit of stuff to talk about in the market. Some interesting stuff's been happening, especially if you weren't in yesterday's webinar. I'll try to recap kind of what I was saying yesterday. Kind of a clunker today for the Holly AI, but we'll go through some recaps and some observations of the Holly AI. The trade of the week, which went out on the email list Monday, is ex-US Steel. It triggered, but it's kind of pulled back and requiring some patience. We'll talk about that one and maybe a couple others that are still open. And then this sector charting is going to kind of tie in with the market recap. We're going through a major rotation, I feel like, at least the beginnings of one. Whether or not it lasts, we'll find out. So let's prepare our minds here with maybe looking at some charts of some of the sectors that are out there that might want to take the baton and move forward as leadership and rotation, continues to look for leadership. So that will be an interesting segment. And then, as usual, time permitting, if we have any open questions or basic charts you guys want to look at, we can do that as well. All right, you ready for the market recap, Andy? No, you're on mute. That's okay.
Oh, I certainly am. I certainly am. And I also wanted to point out before we jump into that, guys, is that Friday support session, even if you are a subscriber, that's great, and you're new, you're going to learn a lot in there. But if you're coming in here and kicking the tires, it's a great place. As long as you're on our webinar invite list, you will receive an invite for this Friday support session. I really encourage you to get in there, because you can learn so much more about what we have to offer here at Trade Ideas than what we can showcase here in 1 hour. So get in there and ask your questions. Even if you're not a subscriber, it's a great place to come and learn more.
Yeah, this coming Friday will be our third week doing that, and if any indication, with 2 weeks behind us, both weeks got busier and busier and more attendees, and we got a lot more done. So anticipating this Friday to be even more attendees and more rapid fire question and answer. Okay, so as we will do, let's start off with market recap. If you guys were not in Jamie's webinar yesterday, I apologize. Not too much has changed, maybe a little bit, but we're going to go over a lot of the same stuff here. Okay, the SPY, using the ETF for the S&P 500, what is coming to notable imagery here is that this trend line is still very much intact. That went back to the beginning of the year. And we've gotten a pretty good distance above that trend line. Matter of fact, I had this trend line drawn and continued, but it looks like I didn't save it. So I want to save time. I'm not going to redraw this trend line, but with your mind's eye, you guys can see that this trend line is continuing up here. It's probably around this level, 238 or so right now. So that is an important level. The level at which we broke out from a couple weeks back, this 240 level. I had mentioned after just 2 or 3 green dots here that, before this red candle came in, the market was probably just itching to back and fill. 2 good reasons to back and fill. We had a gap, and we also had that bottom wick there was prior resistance to now label that current support. So what we got here is a good old-fashioned pivot level and the spiders that we'll call it 240.65 or 240.60, somewhere around there. So that was interesting. The backing and the filling created the green light for move higher once again. That's what this market continues to want to do. And then we ran into a bit of a snag on Friday, and it doesn't really show it so much of the spiders chart, but when we go to the Qs chart, we were right in the middle of our Friday support session when this thing started to roll over, and we were filling the gap for the most part right here. And I said, boy, everybody, wouldn't be surprised to see us actually come down here and fill this gap just like we did in the spiders. Small gap, prior resistance, future support. Well, that candle blew right through that, traded down, and then, interestingly enough, it settled right about that area of interest that we had. And then the weekend came, and then what's very notable is the volume was huge on Friday and also yesterday. The Qs took out a lower low on yesterday to try and see if there was any additional downside movement, again with very large volume. And if we look at some of the stocks that make that up, we can see what was happening across the board. Basically, Goldman Sachs said it seemed like on Friday, I think they put a note out that said the valuations in tech land and tech stocks were just getting a little bit too rich, and that set off kind of a wave of selling in your Amazons and your Googles and your Apples. Apple actually went lower on Friday and put in a big long hammer candle. But I could continue to go through and take a look at some of these tech stocks as we've been doing. But the point that I wanted to make is that there was a major break in the technology sector last week, and it's really hard to jump in after 1 or even 2 days or even 3 days and start looking for areas of setups or new base building. So what happened in technology was a complete break. And if you're looking to play some tech stocks, you can see, just the Qs in general, there's a lot of still gapping down and gapping up occurring. I'm not comfortable really to start looking at some of these tech stock setups until we get a few more days under our belt. But what I've never seen before is something so vicious to the downside like that, with such volume only occurring in one sector. I mean, we look at the spiders that day, yeah, we had a little bit of a downdraft, but the buyers came back in, and it was kind of one big giant spinning top. The Dow, for that matter, went to all-time highs for that day. Okay, that's interesting. And the IWM, which I've been kind of poo-pooing a lot lately, talking about the Russell 2000 not participating, is now starting to get interested in participating. So typically in the past, when we've had these kind of major downdrafts, they seem to translate into all of the moving averages, and we didn't get that. So what that tells us is that we had the crack of a whip, a snap in rotation, a rotation out of technology and into something else. Well, what might that be? One of those things, probably financials. I mean, look what the financials were doing last Friday here as tech was absolutely imploding. So this is what rotation looks like, everybody. It's not to be confused with mass market pullback and 10% correction. We only had that nasty movement in one sector and one sector only, which was latent with technology. So now, we've basically been told that that was just kind of a one-off in one particular sector, the Qs, and everything else is doing okay. Once again, the diamonds, the Dow, all-time highs today. People probably not really wanting to talk about that, but that is the case. All-time high in the Dow. So we do have rotation. What happened on Friday does not scare me for the bigger market in general just yet, unless we start to see some more warning signs. But what we've got is just a good old case of sector rotation as the Qs walked themselves out a little bit too far out on the tree branch, and the tree branch broke. And now we're just trying to find a new baseline and a new base camp in many of these stocks, and they're all different in their own way. Some of them, like Tesla, said, hey, here's Friday, great, I'm back on track, I don't care. But Apple said, you know what, I'm going to go even lower on Monday and put in a big old hammer down here. So it's very stock specific right now in tech land. Just keep that in mind. And again, going through S&P doesn't really seem to care. They moved higher again today, and what's notable is this last orange line that I've been drawing, saying that we've not been able to close above it. We had a piercing above it on Super Crazy Friday, but we closed back down into the range. Here's yesterday, and now today, what do you know? We made a new all-time high closing in the S&Ps, and we are back closing above these levels of resistance. So a tale of two tapes. I know it was kind of all over the place there. Hopefully some of that made sense. You want to add anything?
No, it made a lot of sense, Steve, and especially I like what you said about the Qs. I mean, I think there was some damage there. Anytime you see that big of a sell-off on basically over 4 times normal volume, you have to raise an eyebrow and not just assume. Since we've been doing it over the last 8 years, and there's a good chance we will just dig back in and go back to highs, but you need to be very leery about action like that when you see, anytime you see that big of a red bar and on that type of volume. My goodness, look at that volume bar.
Andy, again, you and I have been together in front of staring at charts since almost 20 years now. Like 8, 9. Yeah, almost 20 years now. We met in 98. Have you ever seen a candle that brutal with that much volume and that much downsize not be reflected in the other indexes? No. Very unusual. So
we must have a delay.
No, go ahead.
No, I was just going to say article from Zero Hedge.
You might be having some internet issues.
Okay, go ahead then.
Okay. All right, so moving on. Again, I think you guys heard Andy confirm that. We've never seen such a dramatic one-sided rotation out of one sector and then into the others. And somebody's making a great point, pointing out some of where the rotation might be. And thank you for doing that, and you are correct. And we are going to get to that. That's part of today's content. We're going to look around some of these sectors and try and find a handful of where the rotation might be going to next, just based on what the sector charts look like. So with that said, we'll leave the market recap behind us. A very unusual week. We'll see how the week unfolds. And we'll move over to the Holly section. Go to my closed trades here. All right, not a whole lot to write home about on the AI today, and that's okay. You know, that's going to happen. You look at some of these win percentages over here, 65, 64, 71% win percentage, but that's still, you know, we have to remember that 35 or 40% of the time it may not work as well as we'd like it to. One thing that I really want to start off here as we talk about the AI today, this was a tweet that I sent out almost at the bottom of the hour, maybe 55 minutes after trading opened. Now, a lot of times we try to talk about not getting so caught up in what the actual event is going on with Holly or what the symbol is. We try to maybe look at the bigger picture. What's the directional bias? Did Holly just come out with 4 shorts at the 10 o'clock economic dump hour? Or did Holly start off the day with 5 longs and never fire off a short? There's some directional biases there that we can play into. Well, we can also take into account activity bias. And for those of you that watch Holly a lot, being at, I'll use East Coast here, about 10:25 East Coast time, and there's no trades coming through Holly, what does that tell me? Well, I wrote it there for you, and I tweeted that. The AI was not seeing any edge almost 1 hour into the open today. So that kind of set the tone for the day. And I don't know about you, Andy, but I've noticed that when the markets gap up on Holly, the AI doesn't really quite know what to do immediately. Gap ups seem to be difficult for the AI. But what happened is we slowly sold off, and then the market kind of dug in right about here, and then we started getting some trades firing off around 10:30 and then into the 8 o'clock or 11 o'clock area right here as well. So first point was the lack of participation of the AI. We sometimes refer to her as a canary in a coal mine, and if the canary isn't singing in the coal mine, then maybe we might want to sit on our hands a little bit and recognize that the alert that was created here to demonstrate some statistical probability setups is not spitting any of those out. So that was my first observation on the day. My second observation on the day was, yes, that right about here, Holly came out with a couple of long trades. And then for the rest of the day, for the most part, that was it. The directional bias was long. except for one, which was interesting. Andy and I were actually talking during this time of day. And let's just start with this one, dry ships. Everybody loves dry ships. Why do I say it like that? Because everybody remembers what dry ships was like back on this day. It was the day traders' absolute treasure trove, gold mine, disbelief, never seen anything like it, and then the price came all the way back to earth and then just continued to bleed off as they continue to release PR, marketing stunts, do reverse splits, whatever they can do to try and prop this thing up. But the one and the only short that fired today, interestingly enough, was dry ships. As everybody else was playing long, some good volume in here, you'll notice our new arrow here for shorts actually points down. So the actual alert was this blue line right here to go short. Well, as we can see, that didn't work. And the top red line here is the actual stop. And we never hit the stop because if we go to this trade, downward dog in dry ships, the one and only short sell, the exit reason was reduced risk. That's just another way of saying, well, this trade is not going in the right direction. The AI is not going to ride this thing out to a full-on stop. We're just going to cut our losses right here. It's kind of a fish or cut bait, cut our losses, exit. But a lot of times we mention don't lose sight of some of Holly's trades, and as you can see, it actually worked out. It just was a little bit early. Once the trade was taken and not stopped out, but the reduced risk exit was deployed. What some people do is they put in a price alert right there at the initial short strategy when we were trying to get the price to come down here with this down arrow. Well, 45 minutes, a bit too soon, but once again it was triggered, and then by the rest of the day it was an actual decent short. So I bring this one up, only one, as the only short of the day to still remind people that, you know, Andy and I loved this call and we thought it was going to be a great call. It just was a bit early, and so when that happens, you don't want to lose sight of a particular trade. Your ability to right-click and create a price alert, I'd call it maybe Holly 2.0 or Holly trade around, whatever you want to call it. Then if the trade comes back down through there, we're going to know about it. As we've often said, the value in Holly is the entry signals, not so much when she gets out. That really comes down to man and machine and discretion. The best we can do is try and give an idea as to what's working best today in terms of the risk on or risk off. Well, and today we had neither. It was really just a constant battle of red trying to get back to green, whether they were open positions, which means risk on. If somebody's asking, risk on means keeping the position open until the end of the day. Risk off means what is the net P&L using the exits from Holly. And so, yes, Holly is the name that we give to the AI software. Richard, it's our pet name for it. And what I'll quickly do, if people are curious about it, you know, you can go to Trade Ideas.
I did drop the link in there, Steve.
Did you? Okay.
Yeah.
I'll just give everybody a quick visual. TradeIdeas.com, under Professional Services, under that particular heading, there's some nice historical performance and some more additional information on Holly the AI. So if you're looking for it, go to Professional Services and scroll down. You can start to get some PR releases and some more commonly asked questions on Holly the AI. So again, not a whole lot of trade arounds other than that downward dog that I saw. I thought that was interesting. If I double click here, there was a couple of notable trades. Now, the first thing I always say is, you know, when a Holly trade comes out is I want to know what is the daily chart looking like. Well, here's one where Holly made 12 cents and then it didn't really do much for the rest of the day. As you can see, a lot of wiggle snake back and forth here, finished barely above the blue line. But when I say look left into the daily chart, okay, this could be one where we say, all right, thank you, Holly. I probably never would have known of TRTN. I think I may just set a price alert above there, and we'll call it a Holly continuation. And it's something that I would not have seen had it not been called out today. For those of you that were in the webinar yesterday, I talked about the same thing with BLDR. Just kind of a haphazard trade, little tiny trade, but then I said, well, wait a minute, let's take a look at this Look at this daily chart here. There's 3 wicks right there at that level. This might be a perfect opportunity to mark up a possible trade alert on BLDR for today, tomorrow, or the next day, and it didn't take long. Today, it basically traded right through. So if anybody caught that from yesterday's webinar, awesome. But my point is, even if we don't trade some of the Holly trades, sometimes there's charts that are coming up that are showing us opportunity that still is out there and still could be yet to come. TTRN I felt was one of those trades in COUP, C-O-U-P, COUP. Looks like it made 23 cents this morning on risk off and then finished flat on the day. But look at this beautiful daily chart, kind of making higher lows, a nice trend line. Vicious 6 or 7 days of selling, but we had a nice bar reversal today after we tested. I'm going to draw that support level for you after we tested that support level over there. So this is also one that I'm going to mark up tomorrow. If we can do a bar reversal and take out today's highs, I'm going to call this one Holly next day setup, or whatever I want to call it, just so I know when it triggers what it is and how I found it.
Could you zoom out? Can you zoom out a little bit on that one too, Steve, so I can see more of the daily?
Mm-hmm.
Oh yeah. Oh yeah.
So you can draw a nice trend line. Everything's kind of hooking up there. We tested the lows of this going back, and then a nice bar reversal. So we're in an oversold condition here. Chances are this could be a day or two opportunity, maybe back up to the upside, you know, in the bigger scheme of things. But once again, still finding charts every now and then, I look at every single chart that comes through here. And this last one, IONS, is also an interesting one. But when I scroll back, it's still got this issue to work with here. So, you know, if it didn't have that, this would also be an interesting one to look at if we were talking 52-week highs here. Again, stocks and charts that we normally would not have seen popping up on here. So there was really no winner today, risk on versus risk off. Again, just to rehash, we got a slow start to the day, no trades for the first hour, so the AI did not see any edge whatsoever, even into the first hour. And I'm saying, again, I've seen this many times, when the general market gaps up, a lot of times the AI is going to just wait and be patient. And that's what happened today. So never really got off on a good footing, but nonetheless, for the year 2017, the AI is still outperforming the S&P handily, as far as we're concerned. Okay.
I think that's a very important, and Steve, if you start to lose me, just cut me off. But I think it's very important what you said about the the market gapping up and Holly having a tough time, because I've actually seen this. This is not the first time I've seen it. I've seen it. It's more of a pattern. So we love to tout Holly. We think she's great, but we'll also point out, you know, some of a potential drawback. And there's a reason for this, because she's taking the most recent data. Like, she's working with today's data right now. And if you look at the spiders in the last week or so, or however long, you're not seeing too many gap ups. It's just pretty much opening, you know, right around in the range, in the prior day's range. So when you see something like that, and then you get a gap up in the market, well, now the market is different than the data points that she's been optimizing and maximizing the night before. So thus, you didn't see anything for the first hour, just because the setups that she came to play with today just weren't in play. So just keep that in mind the next time you see a big gap up, you know, just be a little more selective when it comes to Holly. Yeah.
All right, anything else you want to add on any particular trade today in general, or?
No, I think you hit them good. I'm sorry, I'm at my brother's house and I'm not sure where this phone is even lying around, but I think it's going to stop. Go ahead, Steve.
That's okay. David is asking an off-topic question, and I think it's okay to address it. SGY, excuse me. Our data is showing a short float of 42%. We pull our data from a few different sources, and there's a few different sources that you can go out there and get that data. I just quickly pulled up SGY on shortsqueeze.com, and they're showing 58% short to float. So, you know, what happens is with these short float numbers is they're not always perfect. They might be off by a few points, because the way in which it works is the brokers, they have to report to the SEC twice a month. And when you're only reporting a particular data point twice a month, you know, some sites might not pick up on it as quickly as other sites. We try to be as redundant as possible on that. But, you know, David was mentioning he saw a different value for the short float. I'll look into that one a little bit further, but for the most part, 98% of the time I do trust our short data on that kind of stuff. All right. Let's see here. All right, so enough of Holly. Blank that out. And where are we going to go next? Probably the trade of the week talk. Trade of the week management. All right, so knowing that we had some serious sector rotation going into the weekend, there was not a whole lot of technology stocks flashing on our trade ideas technology scans. And one of the things that was showing up was a pattern, not a pattern, but kind of a sector bias I had on Friday. Andy and I were looking on the trend change lubricant, which is a lot of times where we like to search for some of our trades of the week, trying to find stocks that are basing and breaking down trends and then doing so with a nice short float. I noticed AKS Steel was on here as well as X, and I think there was something else. So it started to, you know, flash infrastructure and other types of sectors that could be rotated into it. So I guess what I was trying to say is man and machine together, there was no way in God's green earth that the trade of the week was going to be called out as a technology stock after that beating that the Qs took on Friday. So starting with that window, we noticed that, you know, X Steel has had, you know, a pretty nice textbook saucer bottom type of a base, okay? This thing has been basing for a while. And what I decided to do for the actual email was kind of what we're doing with the charts now, is give more of a graphical representation of our risk zone and our reward zone. And notice it's not a 1-to-1, it's more like 2-to-1 or maybe even 2.5-to-1 risk reward. And so AKS had a high short float. X at one point in its career had a very high short float and worked a lot of that off, but still has 11 or 12% or so in there. And basically, the trigger was triggered yesterday, right there at that 2270 level, give or take a few pennies, and then pulled right back into the range. And then today we had a real nice tight doji. Well, looks like right off the bat, it's always fun when we get a nice Monday move when the email comes out, or even a Tuesday move, but we haven't gotten that yet. And patience is a virtue when it comes to position trading and longer term trading. And I think we're in a position here of wait and see. There's no harm, no foul really being done. Sideways action is okay by me in my book. What I'm not seeing and what I don't want to see are big red candles that fall back down into the low end of the range and close on lows. We seem to have kind of an interesting level here at 2167. I'll just pop that in there for the most, that's not what I was trying to do. Now I got to take my crosshairs off, get rid of that. My point was that this area right in here, today and yesterday, the low of those two areas, seems to be kind of holding up. Let's take a look at how that looks in the 15-minute time of, there we go. So every time the price gets down here below 2170, seem to have buyers popping back in, and the same thing happened again yesterday. And today, I think the lowest we went was 2179. So this sideways action is fine by me. That's okay. Another day or two of this, and then what we might have is enough kinetic pent-up energy built up here in the sideways action to make another push through that green line trigger and hopefully get this this trade going. And if it does start to go, the upside target would be the filling of this gap, or this void, as Barry likes to call it. So you know, that's the reasoning. We weren't going to pick anything technologically inclined, and trust me, those were not showing up on our scans. We didn't really know what Monday would bring, so maybe looking for a high flyer was not the best idea as well. So this seemed like, other than calling out cash, no position, we don't always want to do that. This seemed like a safe bet that showed up on our Trade Ideas technology scan of the trend change lubricant, which is where a lot of our trades of the week have been found. Okay, let's take a look here. What else was I going to do? Ah, yes, there's a couple that are still open. Speaking of patience, wet F, or what the F, as I've been calling it lately, basically gapped up on us, did not ever stop us out. However, we're moving back to the higher end of our new range here, so it tried to fill that gap, and that's about as close as it got right there before shooting back up. And now we're here at these upward resistance levels again, which basically look around 996, 997. You know, $10 is a great round number. If wet F can get above 10, where it was support back here, I would look at this and say, yeah, everybody, this has been a long 3 or 4 weeks, but patience is a virtue in swing trading, and you just got to kind of let the chips fall where they go and manage your risk. If you get bored and you get out, that's on you. But, you know, if you stick around and there's never a reason to get out of a trade, we could have a nice pop here coming up, and the people that have stayed in wet F, patience is a virtue.
Hey, Steve?
Yep.
Go back and look at the long-term trend on that too. I think not only could you be breaking a huge psychological number here. If you look at that, you don't really need to draw the line. You can kind of see it there going all the way back to even no, go further back, going back to that high above 25.
Trend line. I see.
Yes,
okay.
You see. So not only yeah, it's breaking a. So not only do you have a huge psychological number of 10. And not only that 10 being huge resistance, you can see it there on the chart. So if it does get through 10 and also breaks this long-term trend, which is kind of, yeah, you can argue that it's been done, but really it needs to, you know, it really needs to break out, not just trade sideways, go above it and trade sideways.
Hey,
there's a lot I'm liking about that right there. If you're breaking it and you're going through a resistance and a psychological number of 10, that could be a very powerful move.
Yeah, I'll take a gap above the downward trend line and sideways any day. I'll be patient with that setup any day. Yeah. The other one that still may be open, still is open, is SPWH. Put my crosshairs on. Somebody asked me last week, you know, what you want to see this thing hold. I said I really want to see it hold on to this level right here. Never even really got quite to that level. Got close, but now we're bouncing back up, and hopefully, again, patience is a virtue, and this thing can continue to move higher. So that's the saying. The what?
Chug.
This was an all-time highs stock squeeze play, where the squeeze short float looks to be about 27% at current. We can see that we had a nice break up above and some nice alpha even higher, and then we got caught up in Friday's melee. A nice little recovery off of the prior resistance becomes current support, and that's really where we are in this thing right now. So Chegg, we do not want to see a close necessarily below this level. We really don't want to see a close below that level. We need to have this be confirmed as a pivot level, that prior resistance can become future support, like it did here and still is trying to do here and here. So yeah, thank you for the reminder on that one.
And one other thing to talk to Richard's question about, you know, money being shuffled around, and we've been seeing this happen for a long time, and even there used to be concern when I see X, like, you know, going sideways, even though you're seeing some the market move. Dow's at all-time highs. Spiders had a nice bounce today, and you're asking yourself, wow, why isn't X? That doesn't alarm me anymore, because it's such a rotation game. I would not be a bit surprised to see the markets, and this could be all of them, just fall out of bed and X rip up and break out. And it's just, it's not the same game that Steve and I learned to trade, you know, 18, 19 years ago, where you know, a tide will lift all boats. It's more of a rotation game, and the market could actually collapse, and you could see steel taking off. So, yeah, it's it's just that's the dynamics we have these days.
Well, that's a great segue. So we know that technology just got ripped. We don't know how long it's going to take for technology to recover. But one of the reasons that I use my sector ETF watch list. I've got my top list here, which I could sort by relative volume, but that tells me nothing. What this thing is really best for is change from yesterday's close, which tells me today the gold, junior gold miners and oil service sectors and home builders were getting money flows into them. And then using the A window in real time, this is just showing me as something makes a new high or a new low. So what I thought we might do here as an exercise, coming off of the break in technology and the NASDAQ, where's the money going to go next? So maybe we can, get ourselves in a position where chance favors the prepared mind and go through all of these here real quick and maybe stop on a couple of sector-related ETF charts that look interesting and make some mental notes or even scribble down a couple of sectors to keep our eye on. So let's say I already happen to know that XHB is going to look good, and I may be getting ahead of myself here. So here's the home builders. We'll go through all of them, but let's say we're looking at this, and this is probably one of the best charts that we have out there. And yes, kudos to you, whoever mentioned that earlier about rotation. XHB is definitely one of them here. Who was that? Yes, WW. So what does that mean? Well, that means tomorrow, if you see Holly spit off a trade in Toll Brothers or Lennar or KB Homes or a home builder stock, all of a sudden you've got a little bit more information than you had going into the day if you didn't take a look at some sector charts. So the reason we want to know is what sectors are going to be hot is we have, kind of a head start in our mind. If we see tomorrow something that's going to start taking off in some of the maybe 3 or 4 good sectors we can find today, that's going to give you a good head start in decision making and in process. Yes, Leslie, I can share the ETF, but here's what I'm going to ask. The ETF requires, it's a 2-step process because in the configuration, you'll notice on symbol list, you need to have the ETF list enabled. And I've got 28 ETFs, and I'm not prepared to go through all of that today, but if you want to email info@trade-ideas.com, I'll be happy to send out the 28 symbols that you use to create, I'll do this real quick, a new symbol list, tools, symbol list, create new list, call it ETF, and then just once you hit OK, it's a blank window, just drop those ETFs in there that I can send back in the email, and then label that watch list ETF. That's the only way these two would work, and then I'll be able to go in and I can share through the cloud how the settings are on these. But I do want to get through these before the hour, so let's take a look. We'll come back to XHB. Let's start at the top. And let's just take a look at the biggest slice we can here on the daily charts. Well, gold mining index. I'm going to cheat a little bit here. I'm going to show you something that I've been using a lot. And the only reason I'm cheating is because we don't have the weekly charts up yet. I want to go to weekly charts here on gold. I'm just going to crank into weekly, GLD. Let me show you what I'm looking at. This is going back, way back to 2011, and this is a downtrend of weekly candles. Okay, let's zoom in a little bit. Definitely held them here, got held up here, built a higher low, pushed back, traded through, got denied. But again today, showing some green. So we're really just kind of, sliding down the pole of this downward trend line in gold. And we'll see how it resumes and how it resolves itself. But I wanted to show you guys that because the GDX it's kind of the same thing. It's trying to break a downward trend line here. I'm not going to draw it, but if we start to get some additional market weakness and gold miners start to come into flavor, well, today was kind of the first day of maybe tipping off that hat. If we draw kind of a broken trend line here, we need to see a little bit more movement, but that's the GDX. Nothing to write home about, but interesting. OIH, oil service sectors. This thing has been in a horrible decline for a very long time, and I'm not really seeing much other than maybe a possible, head and shoulders type bottom perhaps, but no breaking of trend lines, no breaking out of resistance, not a whole lot going on there. And then we have the beauty that is XHB. Okay, so you guys should be writing down home builders and getting familiar with home builders. Who are the home builder players? Lennar, like I mentioned, Toll Brothers, KB Homes, anything else that you can think of. If we start to see some sector rotation, we're seeing it all here kind of in the aggregate. Keep an eye on home builders. Could be interesting. Okay. Let's move down the line. Solar is kind of a weak ETF, TAN, running right into resistance here, below its pivot line. Not much interest there. Here's the GDX again, very similar to the GDXJ, but still could be a little bit too early to confirm that. The Qs, we know all about those. We took a look at those, but look at this. Let's add this to our list. Like I told you, when the Qs were getting annihilated, XLF, the financials, were saying, hey, we'll take that money, we'll take that rotation. And so XLF showing some nice movement. So far we've got XHB's home builders and financials showing some interesting setups here on the sector ETF chart. The transports, now this one is also very interesting. I'm going to cheat again. I'm going to go back to the DJT, and I'm going to go back way back. I'm going to go back to monthly. I'm going to show you what I was actually looking at. Typically, I don't get involved with stochastics and things, but one of the things I've always been interested in is what we call divergence. And what we had in the monthly chart of the Dow Jones transports was divergence. The Dow transports were making a higher high here, indicated by that trend line kind of moving up. But the umph behind it in the stochastics was not making a new high. It was making a lower high there, the downward sloping. And in technical analysis, they call this bearish divergence, I believe. Or if it's bullish divergence, I can't recall. I believe it's bearish divergence because the divergence is showing an underpinning of possible weakness. Even though the price went to new high, the umph behind it wasn't quite there. And I've been holding on to this chart for a while. This is a long history monthly. And Dow theory, looks at Dow Jones transport. So I've been monitoring this to see if this was going to work into something. And it's not. It's not working into anything. Matter of fact, today, back to our charts here, the transports, IYT, looking kind of interesting. Okay, so the iShares Dow Jones transports, I think we add those to the list of possible sectors that could take the next rotation. XLK is technology. It looks just like the NASDAQ. Semi is going to look just like the NASDAQ. MOO, well, this is an interesting, less talked about ETF because it's very well heavily weighted, I think, in Monsanto. But MOO basically means this is our agriculture stocks, our stocks like maybe CF, Monsanto, potash, anything having to do with agriculture, you can see maybe coming to life. So I think we might keep that on the short list. FXI is China. It's kind of hard to tell with all these gap ups and gap downs what the FXI is doing, but it is not a downtrend, I can tell you that. IWM, or Russell 2000, we did broach and talk about that for the first time in almost forever. We've got 3 full closes above this last orange line. The IWM is trying to come to life. Therefore, small cap stocks might be coming into favor here real quick if buyers remain in this market and rotation continues. Spiders, we've done that. Biotech is a mess. Biotech is going nowhere fast, just a lot of sideways action. Nothing really going on in there. Diamonds, we saw, made a new high today in the Dow. We're going to the regional banks here, I believe, KBE, it's a bank ETF, so it's going to look similar to the XLF, so we'll just kind of paint those with the same brush. Energy, looks like it's locked right against its downtrend line, nothing going on there in energy for the most part to write home about. Retail, we all kind of know how hard it's been for retail lately, and it looks like today is no real change. We're getting to the bottom of the barrel here. This is probably, one's regional and one's, here's regional, KRE is regional banking. So still the XLF and the banks maybe tiring out a little bit, but they have shown, and I made a tweet last week, it was literally a crack whip rotation from Qs into XLF, just mirror night and day opposites. Amazing. IYR, this is commercial real estate, I believe, right? Yeah, commercial real estate. So it's not so much your XHB home builders and single family homes, but it's more your shopping malls and your REITs. might be one to watch if it can break above this level. That could be an interesting sector of rotation to think about. XLV is healthcare. Well, a lot of news affecting healthcare. If I scroll back here a little bit, hang on a second. Yeah, we're really trying to break out. You know, healthcare, this is interesting. So I'd kind of put this on the short list too. A big flagging event and moved higher here on the day when the NASDAQ moved lower. Healthcare could be interesting. Gold, I think I've given you opinion. It's still in no man's land until it breaks back above, I would say, that level, which broke above its downtrend line and then quickly got hammered, but we'll see if we can put in a higher low and get back above that. The treasuries, I'm not a real expert on the TLT ETF. I'm going to kind of leave that one alone. And here's our steel ETF. Okay, well, last week, Thursday, the day before Friday, we had a really nice move in steel. And Friday didn't really do a whole lot when the market was crashing. So our steel index, which goes with the X trade of the week, not bad, a really nice move upward, and then some sideways action. I'll take sideways action after a move up over a big pullback all the way back down any day. And then I think it probably would behoove me to create a price alert right here and call this sector steel breakout, just so I know that it's happening. If it does happen, if the XLF gets above these levels here, that would be probably a nice first step in seeing X, the trade of the week, move higher. Almost at the bottom here, oil, just, yeah, we've talked about how much oil is in supply out there. Nothing really to write home about oil, the commodity. Silver, very similar to what gold is doing, trying to dig in here and make hopefully a higher low for the silver bulls. And then natural gas, just stay away from natural gas. It's always been the case. So help me recall here what our short list of sectors should be for possible rotation. Andy, I would say XHB, home builders would be one of them.
Healthcare?
I would say XLF is one of them. XLF might need a breather after the big run it had. What else did we like? We liked XLV Healthcare. That was down here. Did we like anything up here in between healthcare? Agriculture we said was interesting, but you know, the pickings are kind of slim in that one for the most part.
Yeah, that is a heavily weighted. I think it's probably Monsanto, and when there's one other one out there, I can't remember what it does. Probably one of the big chemical company anyway, but yeah, it's so. But a lot of times, what you can catch some action on these stragglers like potash and mosaic and CF. CF used to be a high flyer. It's not so much anymore. Of course, there is a difference. There is a difference between the potash companies and the chemical companies, and they're both in that sector. So be careful if you're playing the potash.
Somebody's asking. Richard's asking if Holly ever makes ETF calls, and I don't believe we have that enabled. Am I right, Andy? Have you seen ETFs come out of Holly? I don't really think I've seen.
Not in a while. I have in the past, and more than likely they went in there and they did a filter to prevent it. But I have seen it in the past.
All right. So you know, home builders and commercial real estate, interesting. Agriculture could be interesting. Financials had a good run, but they may still try and hold up. And healthcare. Those are some interesting sectors to keep an eye on, and I may be one step ahead of myself, but that SLX, if it can break above that level that I said earlier, the steel, that could trigger some rotation.
And Steve, I just noticed there's a kind of a healthcare stock on the trend change lubricant, the THC there. I haven't looked at it, but maybe one to watch, to mark up and watch there. If, if it gets above that.
So if it's on this list, it's got a short contingency. Probably
above those 2 wicks.
Probably wouldn't be interested until it got something above there. So anyway, that was the idea, was to talk to you guys, you know, about the general rotation that occurred on Friday out of tech into financials and question mark. And so that question mark really was our little exercise here in going through some ETFs. Yes, I don't have every single ETF. I might be missing a few, but these are good enough for me. These are the ones that work for me. So yeah, anybody that wants some follow-up on the ETF alerts, this one and this one, to make for your own, you can send an email to info@trade-ideas.com. I'll probably be the one following up to make sure that you get all the correct info and the steps involved. So, all right. That's really all I got for you, and we're at the top of the hour.
Yeah.
So unless you got anything else to add, Andy, I'm going to bring Scott back in to give out a cool promo code so those that don't have a subscription can get a really good deal on the first month trial.
Sounds good to me.
Scotty?
Yeah, thank you. So hopefully everyone's subscribed to our Trade Ideas podcast. Just like to go ahead and mention it. It's every week on Fridays after the market, we release a new episode, and it's so far been very interesting and enlightening. You can download the archived versions as well. So go ahead and search for the phrase Trade Ideas Podcast. That's the name of the podcast in your favorite podcast app. You can find it, subscribe, download the back issues. Keep tuned for the new one that comes out on Friday. We have a code to give out. The code this month is SUNNY for this webinar, all caps, just like you see it on your screen. It is case sensitive, and that'll save you 15%. You can use it off your first month or year of premium or standard. You can also use it to upgrade from standard to premium. And remember that both standard and premium, whether you're buying the monthly or the annual, they all include a full hour of one-on-one training with Steve or Andy or Jamie. So once you become a member and you have we recommend watching some videos, attending a few webinars, and going to the trading room for a little while to get a little bit of a handle of trade ideas before you schedule your session, because you're going to want to have some questions on hand for when you schedule your training session. But once you become a subscriber and you realize, oh, I need some help with this area and that area, write those things down and go to schedule your session, and then you can pick the best time and date that's available for you and spend that hour really getting up to speed. It's a great concierge onboarding service. Don't think really anyone else in the space provides something like that. Take advantage of it. And if you have any questions, email info@trade-ideas.com. That's the help desk email that goes through our help desk software, so you get routed to the correct team member to answer your question. Or you can reach out to Steve or Andy directly. Steve at, Andy at, those are their email handles. You can follow Steve on Twitter at TodayTrader. Follow Dan Merkin at TradeIdeas1. Go to Facebook and like our page, facebook.com/TradeIdeasPro, and then you can share the stuff that we post, the unique content there. You can share that with your friends. Thanks all. You get an email later on tonight with a link to the recording, and thanks, Steve and Andy.
All right, thank you. See you next time.
Thanks, Scott.
No webinar.
Thanks, everybody.
We're back on for Thursday and then the Friday support session. Yeah, thanks, Andy and Steve. Good night.
Good night.